Stocks Waft, oil slumps on recession fears. Singapore Asian markets struggled for course on Tuesday, weighed by using worries over worldwide increase following vulnerable China statistics that knocked oil expenses and commodity-linked currencies. The dollar held close to a one-week excessive as traders piled returned into the safe haven foreign money, while the Aussie, Euro and Chinese yuan buckled. MSCI's broadest index of Asia-Pacific shares outside Japan ticked up 0.2%, convalescing from Monday's losses. MSCI's benchmark index has gained 5% from the year's lows, however remains down 15% so far this year. Just as traders were taking coronary heart from a four-week rally in global equities that pushed markets to their highest in greater than 3 months, Monday's underwhelming Chinese interest data spanning business output and retail sales hit sentiment. Also, U.S. single-family homebuilders' self-belief and New York Kingdom factory activity fell in August to their lowest due to the fact close to the start of the COVID-19 pandemic, a further signal the sector's largest economy is softening as the Federal Reserve raises hobby prices. In short, the risks of an international recession are all at once plenty clearer. Then once more, they were, constantly, clean to a few, Rabobank mentioned in a note. And does absolutely everyone suppose that a central bank pivot will cause them to less probable at this degree? Overall, the picture changed into combined across Asian bourses on Tuesday, with Tokyo and Taiwan benchmarks little changed, while South Korean stocks gained 0.5%. Chinese shares rose, a day after the relevant financial institution abruptly reduced interest prices after facts showed monetary interest and credits growth slowed sharply in July. The CSI 300 index ticked up 0.1% after dipping on Monday. On Wall Street, foremost indexes climbed on Monday, reversing in advance consultation losses. Shares posted 4 straight weeks of gains amid optimism over a slowdown in U.S. inflation that would move the pace of Fed charge hikes. The U.S. economic system shriveled within the first and second quarters, amplifying an ongoing debate over whether the United States is, or will quickly be, in recession. Growth concerns had been also the dominant topic in Europe. Euro sector government bond yields fell on Monday with buyers concerned about viable recession and amid continual fears of production cuts in Germany because of capacity gasoline rationing. On Tuesday, the dollar index, which measures the dollar towards 6 principal friends, held regular at 106.53, just beneath the previous consultation's top of 106.55, the most powerful for the reason that Monday of ultimate week. The euro, the most heavily weighted currency in the dollar index, became flat at $1.0158 after earlier slipping to the weakest on the grounds that August. 5 at 1.0154. The Australian dollar fell as little as $0.70005, threatening to drop below the psychological 70-cent mark for the primary time because Wednesday. New Zealand's Kiwi slipped to $0.6349, additionally the lowest since Wednesday. Fragile demand outlook hit oil expenses as they extended losses from the previous consultation. Brent crude futures misplaced 1% to $94 a barrel after falling to their lowest on Monday for the reason that before Russia sent troops into Ukraine on February 24. WTI crude futures shed 0.7% to $88.80 a barrel.